Hey, Steve Saretsky here. As always, the Friday update video with a focus on Canadian real estate, particularly Vancouver real estate. If you like these videos, hit subscribe, thumbs up, comment below. I want to hear your feedback, your engagement, that sort of thing. Gonna touch on a few things. I mean, obviously, a continuing factor that I want to touch on is basically household debt, mortgage credit growth, and home equity lines of credit, etc. There's a lot of data coming out on that in the recent past week. The one-bedroom condo segment, I want to talk a little bit about on that, and really, actually, I want to touch on some foreign buyer numbers that are going to be coming out in the next couple months, and really the pre-sale market and how it all is basically how this is all correlated. Again, as I talked about, in order for the market to continue going the way it is, which is up, you basically have to continue to grow your mortgage credit. You have to continue to grow that debt. Obviously, Canada's debt is very well documented. As of September, the recent data, the Canadian home equity lines of credit are up about 5.3% on a year-over-year basis. So home equity lines of credit, those are still growing. Those are actually up, and I put a blog post to that. You can check that out in the description below. Home equity lines of credit since the year 2000 are up 500%. So the increase in home equity lines of credit are up about 500% since the year 2000. Like I said, basically the home equity line of credit, where you basically tap money out of your house, is essentially funding the average person's day-to-day expenses now, with incomes basically being stagnant and your house values just skyrocketing. People are basically just living off the equity in their home and just continuously pulling that money out and funding, refinancing their house and that sort of thing. So again, home equity lines of credit up 5.3% this year, up about 500% since 2000. The growth on that has just been astronomical, and I've got a blog to that below, basically all tied into the bank's lending. And that home equity line of credit, right? Like that's used to basically, a lot of investors are using that to funnel into a down payment for an investment condo. So it's basically leverage on top of leverage. So it's a very important metric to watch and to follow. But again, it is still increasing. I'm looking for that to decrease before we can start to make, some perceptions on the market and where that might lead. Yeah, I mean, again, just looking at some of this data here, the household credit and business credit, so that's all considered private debt, increased 7.2% more than last year, and it's actually growing at its fastest pace. Household debt, business debt is growing at its fastest pace in Canada since 2008. That's some recent data released by Bloomberg just this week. So again, I mean, you can see that with our extremely loose monetary policy, the Bank of Canada, again, the amount of debt that people are able to borrow on, the Bank of Canada came out with another report this week, basically suggesting part of the reasons why they're very cautious on increasing interest rates is basically because of the levels of household debt and the leverage that's in that system, where they essentially are very cautious about hiking interest rates, particularly hiking them too fast, which, it's funny because this household debt, to reach the levels that it's reached is actually a result of their monetary policy. When you leave interest rates where they are, at historic lows for the past decade, I mean, is it any wonder that people have borrowed their way into this precarious situation that we are in today? So again, it's all correlated. This brings me to really the next point, which is Surrey. I mean, I've talked a lot about Surrey. I think it's an area where there's a lot of local leverage. The credit of borrowers in this area, the suburb of Surrey, which is 30 minutes outside of Vancouver, if you're not from here, it's a lower credit area, it's a lower income area. You know, parts of Surrey, Newton, I believe it's Newton. Yeah, it's Newton, which is the most indebted. It's the most indebted postal code. It's the most indebted area in all of BC. And you obviously have house prices, which have increased dramatically there. You know, Surrey condos, again, are increasing by 3% each and every single month. And that's an area where there's a lot of leverage. And like I said, right now, the people that are driving the market are first-time buyers. They are local investors, which again are leveraging, you know, home equity lines of credit to funnel in, or, you know, leveraging the existing equity in their home to use that as a down payment to ride the hot hand and buy a second or a third investment property. And, you know, you can see that again in the credit growth, in the home equity line of credit growth. And now you have the total dollar volume, so which is the amount of money that's been spent on a Surrey one-bedroom condo, is up on a year-over-year basis. What is it, 384%. So the amount of money spent on Surrey one-bedroom condos is up 384%. If you strip out new construction, so, you know, people will say, well, that's because they're doing this record amount of building, that's why. If you strip that out, it's 294%. So the sales volume, the amount spent on a one-bedroom condo in Surrey, is up 294% year over year if you strip out new construction. So that just goes to tell you the amount of money that is pouring into that market, the amount of people that are, again, riding that hot hand, prices going up 3% every month, people, you know, leveraging and getting into the market. To me, it's just, you know, it's a mind-blowing number, because I think if you look at 2 bedrooms, it's only I think the sales volume is only up about 80 or 90%, which is still a lot, but put that into context to, you know, 294 versus like 90. Again, all the volume, whether you're looking in Vancouver, Surrey, Richmond, wherever, all the volume is basically going into these one-bedroom condos and studios. That's where we're seeing all the price acceleration right now. The further up you go the chain, whether that's a 2-bedroom or a 3-bedroom, there's being, you know, the growth is just not even there compared to what it is in that entry-level segment, which you could paint maybe various pictures in terms of, is this, I'm seeing personally more first-time buyers, local investors. I think that really speaks to the volume. You can see where the money is going. And, you know, again, you look at the detached market, which is quite soft right now. So yeah, that's where we're at in the market right now. Keeping an eye on sort of the credit and its impacts on these entry-level segments. That's where all the price action is right now. So, I mean, hey, if you want to speculate in the market, if you want to make a quick buck, you might still have some room to do that in that one-bedroom segment. But, you know, again, risky gamble. I'm not a short-term guy. I'm always looking for a long-term picture. So, but again, if you want to speculate, those are the markets to do it. Langley, bringing it to Langley, speaking with a realtor out there the other day. This is a first. I've literally never heard this before. If any of you have heard it before, you know, put it in the comments below. But a developer is actually going around in Langley drumming up multiple offers on these presale units. So the project's not completed for another couple of years. You know, they're selling this basically a futures contract. You're buying a piece of paper to, you know, at already inflated costs. And they're saying, hey, listen, like, if you want this presale unit, what they did is they called him. So he applied for he made an application on behalf of his buyer to say, hey, you know, we want floor plan B or floor plan D, whatever you'll give us. They called him back and said, hey, we have floor plan B, do you want it? Yeah, she's like, yeah, sure, yeah, we definitely want it. And he said, okay, great, we have 4 other offers that people that are making offers on it. If you want your client, you know, you can write us an offer, you'll be the 5th offer, and highest bidder gets it. So this is unheard of. I've literally never heard of this. Generally in like a pre-sale unit, if you're lucky enough to get your hands on it, they basically, they'll tell you the price. They'll say, hey, it's you know, 1 bedroom, it's 600,000. Or they generally give you some sort of guideline. There's generally, you can walk into the sales center, you can have a pretty good idea of what things are selling for. They generally have all their prices written out, or they'll tell you what they're written out. But I've never seen a developer go and push and say, hey, you know, highest bidder gets it, make us an offer. To me, I think that's just absolutely crazy. I think it just further adds to the speculation. I mean, good on the developer, I guess, for milking an extra, you know, who knows, 10, 20, 30,000. But I think, you know, I don't like that. I think it's sleazy sales tactic. I think it's just going to make things worse. Like I said, I hate the pre-sale market today. I think it's the worst deal in the market today. And I think there's a lot of things in that pre-sale market that could go very, very wrong if the market goes sideways. I think that's a market that I just really don't like. And that last but not least, quickly going to touch on this. I'm probably going to do more in-depth on this next week. But basically, Better Dwelling put out a report the other day, talked to my good buddies over there, and the foreign buyer numbers, those are going to uptick in the next couple months. As I've highlighted numerous times, there is a record, and it's not even close. There's an avalanche of new supply coming onto the market. Like, these developers have just been building like crazy, and that's why, you know, you have all this pre-construction, which is crazy delayed. There's not even enough tradespeople. You have this avalanche of new supply coming on. The reality of it is, a lot of the product, particularly in Vancouver, and these sort of more iconic high-rise towers, even in Surrey, a lot of them have been sold offshore, and these foreign buyers basically bought them 2 or 3 years ago. And what happens is, you don't pay a foreign buyer's tax and you don't register as a foreign buyer until that actually registers in land title. AKA, when you go to close on that pre-construction condo with the developer, that's when you're going to pay your 15% foreign buyer's tax. And so all this new supply is now starting to funnel into the market. I think 2018 will be a big year for completions. That's where you're going to see all those foreign buyers that bought that pre-sale condo 2.5, 3 years ago. All of them are going to be registering now, and they're going to be paying that 15% tax if they didn't find some sort of creative way around it. If they didn't assign it or flip it beforehand, they're now, when they go to close on it, they're going to register as a foreign buyer. That's going to push the foreign buyer numbers up. But very, very important to understand, that doesn't mean they're coming back, because we've certainly seen a decrease in them. It just means that they bought it a couple years ago, they're now closing on it. And my only concern is, again, you're going to have media which loves to paint the headline that the boogeyman, the foreign buyer, which is the cause of driving up these prices. There's no question, we know that it is influencing the market, I would say significantly, but there are many other factors at play, particularly, again, this obscene credit, that they're going to say the boogeyman is coming back. Look at the foreign buyers numbers, they're jumping. I think like Surrey went from 2.5 to 5% a month or two ago, and that's because one of their iconic high rises, I believe it's called the Park, which was heavily marketed off sea, completed. And I think that's the reason for the increase in the foreign buyers numbers. We'll get some more data on that, and we'll go into more depth on that, but pay very, very close attention to that, because I think sadly what is helping fuel some of this fear of missing out, this speculation where people are just, again, driving up these one-bedroom condos, is there's a belief that the foreign buyer is still here and it's still extremely active. And I think what's happened is they've quietly exited the market, and the locals here are basically picking up that excess slack. And that's why you see that high end, particularly on the west side, all those $3-4 million houses, those are dead, because they're just not here like they were in 2015 and 2016. And the local has picked up that slack. And the media likes to paint the picture that you know, they're here and they're increasing, and this just causes more panic and just adds more speculation into our market. So I want to make that very clear. It's one thing to have the data, it's another thing to actually interpret it and understand it, and that's what I hopefully try to do for you here today. Anyways, that's all I got. I'm not going to ramble on. Appreciate it. Hit subscribe, comment. I want to engage with you below. So anyways, hope that helped, and talk to you soon.